Is this further evidence of a strong economic recovery that implies that the government will follow the Reserve Bank in withdrawing the stimulus in the budget and focus on fiscal consolidation? To discuss this, we're joined by Dr. Saumitra Chaudhuri, Member Planning Commission and Member of the Economic Advisory Council to the Prime Minister. Also joining us, Sunil Kant Munjal, former President of the CII. Gentlemen, many thanks for joining in. Mr. Chaudhuri, let me start with you. What do you think is the core of this rather strong number? Is it really base effect or is it driven by domestic demand? And is this further evidence of a broad-based recovery?
It is a broad-based recovery. It is based on domestic demand. We know export growth is very weak. It's entirely domestic phenomenon. It's also a base effect. Let's put it like this. We had about 18% growth in manufacturing output. In December 2008, you had a contraction of about 0.6%. So, on average basis, if you were to look at the growth between the levels of output in December 2007 and December 2009, roughly you get an annualized growth of around 9.5%. Now, this is very important because last year was, in a sense, a bit of a loss, bit of a washout, where the second half did not grow at all. The worry was, can we make it back to the trajectory from where global conditions caused us to slip away? And it seems, the December number suggests, that we are really back to that trajectory with which we got 8.5%, 9% growth in previous years. You're back on that track because the average of 18% over 2 years is 9%. So you're back as far as manufacturing output is concerned in the month of December to 9%. Now that may or may not sustain. It may be lower in the month of January and February, but it crosses a major, in a sense, a milestone, a certain level, a threshold level, which is the basis for expecting that in the coming year we will be back to 8.5% growth.
All right, let me put that question to the manufacturing man on the panel, Mr. Munjal. Many thanks for joining us, sir. You just heard what Saumitra Chaudhuri has to say, that, break it down to the average 9% growth, but the point is that manufacturing seems to have crossed that threshold. It seems to have crossed that milestone. Whether or not it's sustainable is another question. Would you agree, sir?
I broadly agree with Saumitra. Clearly, we are seeing an improvement, and as you yourself said, the improvement is more than was expected. It has come in from the capital goods. It has come in from the consumption side, actually is improved. We're seeing consumer durables go up. We're seeing intermediates go up. But there are some concern areas. Those sectors which are highly labor intensive, those have not yet shown growth, whether it's textile, leather, processing, and that is a bit of a concern area. And which is why, going back to the point which has been made a bit earlier about the stimulus, I think we need to be a bit careful with connecting these two so quickly. Because we are seeing an improvement, we need to find a way to make sure it is actually sustained before we even start a discussion on withdrawal of the stimulus.
So, Mr. Munjal, would you say that the government, if it begins to factor in these numbers as the start to moving towards fiscal consolidation and withdrawal of the stimulus measures, it wouldn't be prudent to do that at this point in time?
I think so. If you see, part of the improvement actually has come because of government spending. Part of it came because of the stimulus package, the payout in the government salaries, so it actually improved consumptions. We've certainly pump-primed the system, and that has certainly helped. And we need to ensure that we actually make this consistent over the next few months before any change in the fiscal package, before the withdrawal of any stimulus package. Because don't forget, we have a GST coming up, and I do hope in the budget we will hear some announcement of definite dates, and that's going to announce new rates again. The suggestion that we are making is allow this to continue until the new GST system comes in. So, because the services themselves are doing well, agriculture continues to be a concern, but again, agriculture also has done better than expected. So we need to find a way to support all of these collectively.
Mr. Chaudhuri, what do you have to say on the sustainability of this growth? Are you expecting, for instance, growth closer to 9% in the year ahead?
I'll say over 8, 9, let's hope so, but I think the over 8 is a very important kind of a number to cross. Maybe 8.25, maybe 8.5, something like that seems realizable in the next year, even with, because let us be very honest about these things. Exports are not going to come back with a big bang next year. It's going to be tepid, And a lot of our industry is export-oriented, so there is going to be some slack there. But the rest of the economy could get us over past 8%, and that, I think, will be a great achievement.
So with strong industrial production, higher FDI inflows, perhaps better business confidence, is private investments also set for strong growth, you would think?
I think next year we'll see a lot of pickup. I think this year there was still a bit of hesitation, particularly when it comes to taking on more leverage. There is more debt, as you may have noticed. The bank credit offtake is still not showing very rapid increase, because I think companies are a bit wary of taking on leverage unless they're certain about a project. So I think that's going to happen next year. Many of them actually have their private war chest already ready. Many of them are lined up a lot of issuance of equity. So I think the credit will come next year, and we're going to get a big pickup in private investment. The stronger the pickup, the better the growth prospects will be next year and the year after that.
All right, Mr. Munjal, back to you. While industry will want the stimulus measures to actually continue, what are you expecting, sir? More tightening on the monetary side, given the fact that we seem to be seeing pretty stable recovery, at least at this point in time? And also, is industry now beginning to factor in the real possibility of at least some of those measures being done away, especially things like the excise?
Let me just go back to the point that Saumitra was making. You know, the recovery or the growth in the banking system this year is a little bit different. Last year, 30% was coming from loans. This year, 27% is coming from deposits. Only 10% has come from loan growth. So we do need lending to come back, especially in the non-food sector. It has begun to improve, though. It's about 10% right now. And that shows us that we are starting to build capacity. And if that continues for a while, this growth and this improvement should certainly continue. So I would imagine we're a little bit early. RBI has already tightened the system a little bit through 2 doses of CRR. We have to be careful with the rate itself at this moment.
Mr. Munjal, in fact, we've also got the central bank in China tightening the bank reserve requirement further by another 50 basis points. Is this making you more apprehensive and more edgy that we are going to see the possibility of tighter monetary measures?
There is a concern at this moment in industry. On the one hand, with the amount of money which was in the system, it was expected. But beyond a point, it starts to signal rates as well. At this moment, most commercial banks are saying, both public sector and private sector banks are saying, we are okay with this tightening, but we will hold the rates. But if we do any more, then the rates are likely to shoot up as well. And I don't think at this point in time we can afford that, because our recovery is good, but it is still nebulous.
Mr. Munjal, Mr. Chaudhuri, many thanks for joining us and sharing your perspective on the IIP numbers and the broader economy. In fact, we've got 2 more